I mean, last year we saw corporate earnings do really well, which is, look, long term, if corporate earnings don't go up and the stock market goes up, that's called a problem, right?
Yes, yes. If one gets too far, everything reverts to its mean.
Yeah, so if people continue to pay more and more and more for the same amount of earnings, eventually that's a little dangerous as opposed to let's have earnings increase.
And therefore, stock prices increase along with earnings.
The perfect situation is an area where you've got earnings increasing and stock prices flat or stagnant, give you an opportunity to buy in more as growing companies. But
yes.
But so anyway, we had last year was
but we're seeing that. I mean, there's a rotation in the marketplace taking place. I mean, the big seven, mighty seven, magnificent seven.
They weren't the magnificent ones last. As a matter of fact, of those 7 stocks, only 2 outperformed the S&P 500 last year,
which I thought was a great sign. Which is a great sign.
Well, those 7 comprise what, 35% of the stock market index?
Yes.
Those 7
of the S&P 500.
Yeah. Thank you. Of the 500, they're not necessarily the largest company, but essentially the largest companies in the United States. Of those 500, 7 of them comprise a third of the value.
Which so goes the 7 goes
Correct,
the market.
Obviously, yeah. I mean,
right?
You can't have those two
But
horrible.
we're seeing so other companies actually didn't, their earnings increased, but their stock prices didn't increase, which now it's happening.
Correct. And we've finally seen small cap stocks hit a new high, Russell 2000 or whatever.
Finally.
You know, I was reading an interesting article about there's been many advisors that have been big into small cap stocks. Small cap value particularly. They say weight your portfolio to small cap value. And I'm not going to mention any names, but there's a whole school of thought out there that this is and I read this study talking about, first of all,
before you go on to that, are you going to explain why they have this thesis?
Well, because historically they've outperformed.
Historically,
they've outperformed. But there's 3 periods of time in the last, say, 75 years where their outperformance, maybe it's not fair to try to take that out because that's reality, right? But anyway, there's 3 periods of time that they had such dramatic outperformance that it helped lift that long-term average above that of the rate of the S&P 500, let's say. And I don't know if the last time I looked, it was 1.5% better or something like that over the long-term small cap stocks. But we haven't seen that the last 20 years, maybe longer. And a lot of it might be that these companies just
they don't come to market.
They don't come to market, or if they're on the market, they go private.
That's right. Right. That's
how many companies do you see, public companies, go private?
Well, look, Scott, look at our company, right? We have a friend that took his company private or public 25 years ago.
Yeah, I know you're talking about.
Right?
30, maybe a little longer than that, almost 30 years ago.
30 years ago. And if you had the conversation with him today, he said we would have never gone public. We would have gone
not
to the
in
private.
This market.
Yeah,
you wouldn't need to in this market.
We would have gone to the private markets, right? We would have gone to the private markets, right?
Yeah, there's multi-billion-dollar companies that are private, tens of 20, even larger than that are private.
Yeah, well, non-family owned, small upcoming companies. There's big companies that are massive, but they're not small cap. They're
Fidelity's privately owned, family owned.
That's right.
Yeah.
Like what
as opposed to say Charles Schwab, which is a public company.
Correct. So you wonder, in this regulatory environment, I have a thesis that actually they're loosening the regulatory environment on corporations to the point that private companies will now start going public.
Well, there's some loopholes now that some companies have kind of driven a truck through to get smaller investors where they don't go quite public. Right.
Which is contrary to what I just said. But they're almost public. They're trading. The stocks are trading. They're just not trading on a public exchange.
Fair. There's private exchanges now. You can buy shares in a lot of these private companies.
Yeah, which is a loophole around the SEC regulatory.
Yeah, I had a friend of mine. This is 15 years ago. He took his company. He was public. They actually bought a public company, rolled this company in, and then they took that private. This was maybe 15 years ago. He said the compliance costs, this was 15 years ago, small company, was about $7 million a year just to comply with the regulations to be a public company.
And what do you think their earnings were? 50?
maybe less than that. And I think about it.
So if you look at a percentage,
I think it might have been less than that.
as you look at
It was
a percentage of earnings that go to the regulatory or the compliance. So do you wonder if
You take a company of 50 million, let's say they're trading at 20 times earnings, $50 million. That's $1 billion company. But if you're paying $7 million of your $50 million in profit just to stay in compliance,
it's significant. What, 17, 18%?
well, I would certainly love to see a loosening of the regulatory environment for public companies.
But is the private markets exchanges, aren't they just recreating a public market exchange in the private?
Yeah, but one of the beauties of the public markets is you can buy an almost zero cost ETF. From an investment standpoint, your cost of investment can be so inexpensive. And the further you are removed from the large public markets, the more friction there is, i.e., the more cost there is.
I'll give you that.
Yeah. So.
Yeah. I hear the ads where you could buy Meta and you can.
There's ads?
You can buy private companies. I hear ads saying you can get into the big stuff just like private equity. And they're private exchanges. But
yeah,
they're
private
expensive.
exchanges. They're expensive.
They're expensive.
And who knows if you're getting the right kind of. I mean, there's two costs. There's one is the transaction cost, the commission. The other is the spread.
Yeah, and liquidity.
Right. Anyway, it's interesting. I find that following that stuff's more interesting than following where the exchanges go on a daily basis, because that's just kind of noise. And if your goal is to try to outsmart the markets,
Good luck.
all the more power to you.